Ever walk down the street and wonder, like, who owns that building? You know those shiny new office
Yeah.
buildings? Or, like, what it even takes to invest in a place like that?
Yeah.
Well, today,
The whole other world.
today
Oh,
we're getting you off the sidewalk and kind of into that world.
behind the scenes.
Yeah, the world of commercial real estate.
Exactly.
And we're not just window shopping here. We've got an exclusive look at how the pros actually do it.
We do. We've got a real sneak peek.
Right. We're diving into an actual email newsletter from Eureka Business Group.
Oh,
It's a brokerage firm down in Texas.
nice.
And they sent this out late November 2024.
Okay.
Think of it like we're getting a peek at what deals are being whispered about in those, high-rise offices.
Right. And not just what they're whispering about,
Yeah.
but the language they're using,
Yeah.
the way they're talking about it.
Yeah, and there's a real sense of time is money in this email. It even mentions a year-end rush, which tells us there's something going on. Like there's something in the air pushing buyers and sellers to make moves before the year ends.
Yeah. A little bit of urgency there.
Do you think it's tax deadlines or is the market just that hot right now?
Maybe both. I mean,
Ooh, good question. And speaking of on the go, Eureka even offers to let you listen to the email.
wow.
These investors are serious about multitasking.
Yeah. They don't have a lot of time to sit down and read through a long email.
Yeah.
They want to be able to take it with them.
Exactly.
Listen on the go.
And you know what else screams efficiency?
What's that?
All those abbreviations they throw around. You were stumped by a few, weren't you?
Oh, absolutely. I felt like I was back in school trying to decipher some ancient text.
Oh, absolutely. NNN, VPD, BOV. It felt like I needed a decoder ring just to understand what they were even selling.
Right. It's like a whole secret language.
Yeah.
But once you know the lingo,
Yeah.
it really opens up this whole world of insights.
Okay, so let's break those down so you can see how the pros actually talk shop.
Okay, let's do it.
Okay. NNN.
All right. NNN is short for a triple net lease.
Okay.
And what that means is the tenant is responsible for most of the expenses on top of the rent.
So not just the rent.
Nope, not just the rent. They're also paying for things like taxes, insurance, maintenance.
So that's attractive for a hands-off investor.
Oh, absolutely.
Yeah.
If you don't want to be bothered with the day-to-day headaches of property management,
Right.
a triple net lease can be a really appealing option.
Okay. So then there's VPD.
VPD, which stands for vehicles per day.
Okay.
It's all about traffic. How many cars are passing by a particular location every single day?
And that's a big deal for businesses that rely on foot traffic.
Huge. Think retail stores, restaurants, anything that needs to attract those drive-by customers.
Okay. So if a property boasts 40,000 VPD,
Yeah.
you know it's in a bustling area.
You know it's prime real estate.
High visibility.
Yeah, exactly. Okay, last but not least,
The mysterious BOV.
broker's opinion of value.
Okay, so tell me about that.
So it's not a full-blown appraisal, which can be quite expensive and time-consuming,
Right.
but it's a quick snapshot
Yeah.
of what the property might be worth on the market.
So sort of a ballpark estimate.
Exactly. Gives you a general idea. And you know what? Eureka even offers a free BOV as a way to draw in potential clients.
Clever marketing tactic, wouldn't you
Ah,
say?
absolutely. It's a
Yeah.
great way to get people thinking about selling, even if they weren't planning to.
Yeah. Piques their interest.
Gets those wheels turning.
But enough about the setup. Let's get to the good stuff. The properties.
Let's do it.
Eureka breaks down their featured properties by price, starting with those under $2 million.
Okay.
They've got a vet clinic,
All right.
a dentist's office, and a medical/office space.
Interesting mix.
Yeah. It seems like these are kind of the gateway drugs of commercial real estate investing.
That's a good way to put it.
They sound pretty low risk compared to, say, a skyscraper.
Right. You're not betting the farm on these properties. Yeah. But they can be a great way to get your feet wet.
And they're often seen as stable, reliable investments.
Exactly.
Perfect for someone dipping their toes into the market.
You got it.
So Eureka really plays up the vet clinic's location
Okay.
and how solid the tenant is.
Makes sense. You want a business with staying power.
Right. And for the dentist's office, they highlight the high traffic volume, over 35,000 VPD.
Wow. That's a lot of potential patients driving by.
Yeah. But what about this medical/office space in Crowley?
Crowley, yeah.
They call it a rare opportunity. What's so special about it?
Well, they mentioned the potential for a sale leaseback, which means the current owner could sell the property but stay on as a tenant.
Oh, okay.
Or the new owner can find a completely different tenant. It gives you options.
It's like a choose-your-own-adventure property.
I like that.
They even mention SBA loans, so they're not just targeting seasoned investors, right?
Exactly.
Yeah.
This property could be a good fit for someone who wants to run their own business out of the space, too.
Mhm.
It's a smart move by Eureka to widen their net.
So under $2 million, we've got kind of a mix of stability and potential, something for everyone.
Yeah, seems like it.
But let's move up the ladder, shall we?
Yeah.
The $2 million to $5 million range is where things start to get really interesting.
All right, let's see what they got. It's fascinating how Eureka caters to this fast-paced world of investors.
Yeah.
They know their audience doesn't have time to waste.
Right. I'm still thinking about that. Did you know you can listen to this email feature?
Oh, yeah.
It's brilliant, isn't it? They're turning a regular old email into an on-the-go audio experience.
It makes perfect sense.
Yeah.
I mean, these investors could be listening to market insights while they're, stuck in traffic or between meetings,
Right.
maybe even on the golf course.
Yeah.
It's all about maximizing their time.
And let's be honest, it also makes Eureka look pretty cutting edge.
Oh, for sure.
It's not your grandpa's brokerage firm.
No, not at all.
They're tech-savvy and in tune with their clients' needs.
That's important in a competitive market.
Yeah.
Another thing that caught my attention was their offer for free BOV
Uh-huh.
that brokers' opinion of value.
Yeah.
Do you think that actually works to reel in clients, or is it just a marketing gimmick?
That's a good question.
Yeah.
I could see it going both ways.
Okay.
On the one hand, it feels a bit like a free trial you might see for like a software product.
Right.
It's low commitment, and it could pique someone's curiosity.
Exactly. Even if you're not actively thinking about selling,
Right.
wouldn't you be tempted to know how much your property is worth?
Yeah,
It's valuable information
for sure.
for tax planning, refinancing, or just to, pat yourself on the back for a smart investment.
Right. It could be a little bit of an ego boost, too.
A little bit.
Like, look how much my property has appreciated.
Exactly. I'm a genius.
Uh-huh.
And let's not forget,
Yeah.
it positions Eureka as a trusted advisor. They're providing a valuable service for free,
Yeah.
which builds rapport and opens the door for future business.
All right. Enough about marketing tactics.
Oh.
Let's dive back into the properties themselves.
Let's do it.
I'm curious about that Starbucks in the $2 million to $5 million range.
Okay.
They seem to have a knack for picking prime locations.
Starbucks is known for its meticulous site selection process.
Really?
Oh, yeah.
Okay.
I mean, they analyze traffic patterns, demographics, even the proximity to competitors.
Wow.
They want to make sure their stores are in high visibility, high traffic areas.
And this one boasts over 40,000 VPD.
That's a lot of coffee drinkers.
A lot of potential customers driving by every day.
Right.
Plus, they emphasize minimal landlord responsibilities.
Okay.
What does that tell you about this property?
It's likely a triple net lease,
Oh, okay.
which, as we discussed earlier, means the tenant covers most of the expenses.
Right.
So that translates to a relatively hands-off investment for the owner,
Yeah.
making it attractive for someone seeking passive income.
Okay, so Eureka also highlights the over 6% cap rate.
Mm-hmm.
Now, correct me if I'm wrong, but a cap rate is basically a measure of the potential return on your investment, right?
You got it. It's a way to compare the income generated by a property to its market value.
Okay.
And a 6% cap rate is quite good, especially in today's market.
Oh, wow.
Yeah.
So the Starbucks seems like a pretty solid bet.
It does.
You've got a strong tenant in a prime location with good potential return.
Absolutely.
But not all investors are looking for something so passive.
Right.
What about those value-add opportunities we talked about?
Ah, yes.
Yeah.
This is where things get more exciting
Okay.
for investors who like to roll up their sleeves and get involved.
Okay, so walk me through this.
All right.
Eureka mentions a large retail space with rents under market.
Okay.
What exactly does that mean for a potential investor?
It means there's an opportunity to increase the rental income.
Okay.
Perhaps the current leases are below market rates.
Right.
Or maybe the space isn't being utilized effectively.
So an investor could come in, make some improvements, renegotiate leases,
Yep.
and potentially boost to the property's value and income significantly.
Exactly. That's the essence of value-add investing.
Okay.
It's about identifying properties with unrealized potential
Yeah.
and then implementing strategies to unlock that value.
Eureka also mentions an office building with value-add opportunity in an affluent town.
Okay.
What kind of strategies might work in that scenario?
Well, depending on the specific property and market conditions,
Yeah.
an investor could upgrade the amenities, renovate the space to appeal to a higher-end tenant,
Okay.
or even convert it to a different use altogether.
So it's not just about buying a property and collecting rent checks. It's
Right.
about actively managing and improving the asset to maximize its potential.
Absolutely. And, the location of that office building in an affluent town
Yeah.
is a key selling point.
Makes sense.
It suggests strong demand for office space from high-quality tenants,
Right.
which can lead to higher rental rates and long-term leases.
It seems like location is a recurring theme here.
It always is in real estate.
Yeah.
Location, location, location.
They also highlight a medical property across from a hospital.
Oh, wow.
I mean, that location speaks for itself, doesn't it?
You can't underestimate the importance of location in commercial real estate.
Yeah.
Being near a hospital is a huge plus for
Oh.
any medical-related business.
Right.
It guarantees a steady stream of potential patients or clients.
And let's not forget that newly constructed multifamily property with luxurious finishes on Munger Street.
Ooh, fancy.
They're clearly targeting a specific demographic with this one.
You bet. They're appealing to a higher-end renter
Okay.
who values luxury amenities and a prime location.
Yeah.
This type of property can command premium rents,
Right.
but it also requires a deeper understanding of the target market and their needs.
So it seems like this $2 million to $5 million range offers a mix of passive and active investment opportunities,
It does.
each with its own set of risks and rewards.
That's a great observation.
Yeah.
And it highlights the importance of understanding your own investment goals and risk tolerance before jumping into any deal.
Yeah, for sure.
But speaking of risks and rewards, let's shift gears and explore those properties in the $5 million to $10 million range,
Okay.
and even those exceeding $10 million.
All right, so we've explored properties for the budding investor
Yeah.
and those looking to take a more hands-on approach.
Right.
Now we're entering the big leagues. Properties priced at $5 million to $10 million.
Ooh.
And even those over $10 million.
Big players.
Yeah, and the
Mhm.
language in the email definitely reflects that.
Uh-huh.
It's less about hand-holding and more about assuming the reader already speaks fluent commercial real estate.
Exactly. They're not wasting time explaining the basics.
No.
They're highlighting key details that a seasoned investor would immediately understand.
So let's see what we can decipher.
Okay.
In this price range, we've got several retail centers.
Right.
One is strategically located near the San Antonio airport. Another is a brand new construction in a wealthy Austin suburb.
Nice.
And the third is a real head-scratcher, a Walmart shadow location.
Now that one piqued my interest too. Walmart shadow location.
Yeah.
It sounds almost ominous, doesn't it?
Yeah, a little bit.
But it's actually a very strategic placement for a retail center.
Okay. I'm all ears. Break it down for me.
All right, so think about the sheer volume of traffic that a Walmart generates.
Oh, yeah.
A retail center located nearby can benefit from that spillover traffic.
Okay.
It's like catching the crumbs from the giant's table.
So you're basically piggybacking on Walmart's success.
Exactly. And Eureka highlights that this particular property is priced well below replacement costs.
Okay.
That's a big deal for an investor.
Yeah.
It suggests they could be getting a bargain,
Right.
a property that would cost significantly more to build from scratch.
And they mention a 7.25% cap rate, which, as we've learned, indicates a healthy potential return on investment.
It certainly does.
Mm-hmm.
This property seems like a compelling opportunity for someone looking for a stable, income-generating asset with a strong tenant base.
Yeah.
But let's not forget, these are still multi-million-dollar deals.
Right.
So a thorough due diligence process is essential.
Right. You don't just casually drop $5 million on a retail center, even if it is next to a Walmart.
Exactly.
But as we climb even higher in price, the details become even scarcer.
Okay.
In the over $10 million category, there's only one property, an industrial building with a national credit tenant.
Now, this is the type of property that often attracts institutional investors, pension funds, insurance companies, the big players with deep pockets, and a long-term investment horizon.
They're looking for stability and predictable cash flow.
Right.
And this property seems to tick all those boxes.
It does.
They emphasize the new construction, the long-term lease with built-in rent increases, and of course, that national credit tenant.
That's the golden ticket for these investors.
Okay.
A national credit tenant means lower risk. It's a company with a solid track record and a strong financial standing.
Yeah.
They're not likely to default on their lease payments.
So this industrial property is basically the blue chip stock of commercial real estate.
You could say that.
Low risk, steady returns.
Yeah.
Perfect for a conservative investment portfolio.
And it's interesting how Eureka tailors their message to the specific audience they're targeting.
Yeah.
For these high net worth investors, it's all about the bottom line,
Right.
the numbers.
They don't need flashy marketing or emotional appeals?
No, they want the facts, the figures, and the potential return on investment.
Precisely. And Eureka delivers that information concisely and effectively.
They do.
But before we wrap up, I wanted to point out one last detail.
Okay.
Eureka ends the email with a link to their commercial real estate news podcast.
Ah, yes. The subtle plug for their own content.
It's a smart move.
It is.
They're positioning themselves as experts, as thought leaders in the industry.
It's all about building that brand recognition and trust. And of course, they include a clear call to action, encouraging readers to reach out to Joseph Goslan directly.
So even though we're talking about multi-million-dollar deals, it still comes down to personal connections and building relationships.
Absolutely. Real estate is a people business, no matter the price point.
Well, I have to say, this deep dive into Eureka Business Group's email newsletter has been a real eye-opener.
It has.
We've decoded the language, analyzed the properties, and gained insights into the strategies used to attract different types of investors.
And even if you're not planning to buy a retail center anytime soon,
Right.
understanding this world can help you see your own city in a new light.
You're right. The next time you walk down the street, you might just find yourself noticing the for lease signs, the construction cranes, and the subtle clues that reveal the forces shaping the landscape around you.
It's like a secret language, a code that unlocks the hidden dynamics of the commercial real estate market.
Yeah.
And now you're a little bit closer to cracking that code.
So keep your eyes peeled, your ears open, and your minds engaged.
Always.
There's always more to learn, more to explore, and more to discover in this fascinating world of commercial real estate.